Our next guest sees reasons to be cautious, at least in the near term. Chris Verrone, head of technical and macro research at Strategas, is here at Post 9. It's good to see you.
Great to be here.
Let's be clear on what you think. You're not talking about a change in your overall view, which has been positive. It's just it could be a little bit volatile in the next days, weeks?
That's right. I think everything we do, at least, is incremental. And you think about the last couple of weeks, you have this move in yields, you have gold unbothered by it, you have hot oil, you have dollar up. Tactically, does it make sense to maybe watch your back here after a 20+% move in 5 months? Absolutely. But as we were saying earlier, I don't want to lose the plot of the movie here. And the plot of the movie here is this is an ongoing bull market. Bull markets pause or consolidate from time to time. What I think we just want to be a little bit mindful of are maybe some flashes of some leadership change under the surface. I've been finding it curious that stuff like utilities have quietly perked up here a little bit, an unusual mix given the move in rates. So I think it's more about rotational impulse than it is some outright distribution or selling.
Hasn't there been, though, a twist in the plot, right?
Yeah.
The plot of the bull market was economy good, Fed cuts coming, and Fed cuts coming soon, and rates are going to move lower. Well, we've had a plot twist because we think now rates are coming later, with some suggesting they may not come at all. And we're hoping that the economy can withstand the Fed staying higher for longer. So how do I square that?
So I think the key to macro is distinguishing between what should happen and what could happen. What should happen, the Fed probably shouldn't cut rates here, given the persistency we've seen in the economy, what the inflation data has looked like. But that doesn't mean that they won't cut rates. And if you look at the message of gold here, gold, I think, is behaving as if the Fed is going to do exactly as they have said and cut. So I'm hesitant to get too negative or too cautious in that environment. And
you think that backdrop is what's been driving this incredible record run for gold?
I think gold is becoming the release valve of what ultimately could be viewed as a policy error cutting into a very strong economy. Now, I think you make a good point. The narrative or the consensus out there is the economy is strong, and that's the camp I'm in. But we also have to poke holes in that and see if anything is changing. And what I would be mindful of, if this status quo of strong economy is going to persist, we need stuff like discretionary to keep outperforming. We need, I think, financials to stay part of this game. And there's maybe some modest pause or correction in those groups. How they respond out of this, I think, is going to be essential as to whether or not the status quo can persist.
Well, are you worried about this breakdown in the financials? The XLF, I think I said earlier, was below its 50-day for the first time since November.
After maybe its best 3 or 4 month move.
No question about that. But you use the words needs to continue.
Sure. And, if you look at the soft landing episodes historically, 94, 95, and 84, 85, so non-recessionary rate cuts, what do they have in common? Financials were absolutely above and beyond the best sector. So I think if we're going to maintain this, you want them to participate. Now, the good news is we're a week removed from 52-week highs in a lot of these banks. I think JP Morgan actually making a 52-week high today. So I don't want to get too carried away with, they're breaking down, they're not working. But do we have to kind of put it on our list of things to watch? Absolutely.
Talk to me about 5,200. So we've retaken it on the S&P as we in the final stretch here. How important is it that we hold it?
I don't think it's that crucial. I mean, there is really good long-term strategic support in the 49 to 5,000 range. So I think if you got a deeper pullback or a correction over coming weeks, there's a lot of support underneath this. 50-day moving average is roughly 5,100. That might not be enough to contain near-term weakness, but look at how a lot of stocks today hit some big levels and came right back off of it, particularly when you look at some of the tech names. So you have to kind of tip your hat to the market and say it's another sign of a bull market acting as bull markets tend to.